afternoon, everyone. I hope you guys are having an awesome long weekend. Uh, it's just are always hard when you don't have work on Monday and you're in the mode of let's get going, especially when I've been sick. So, anyways, let's do get going. So we've had quite a week last week when it came to all the things that were happening. We saw this Fed move down. We were wondering where it would end up and where it won't end up, or where it could find some support. For now, we see that there was some support found at 389.95, which is the end of the second wave of this larger structure here. Okay. And I did have a pivot on 393, but it seems like that it was pretty much clear that that pivot is not as important as the 389.95 pivot. So I moved it down a little bit just to kind of let having the market give me what it thinks is important. So we'll work with that from now on. I do think that there is a possibility this week that we see 375 to 373 zone, just because the way it has been going. So it's uh it's quite a ways down, but it's okay because this is how the bottoms are formed. Okay, they're not gonna be going all the way up, just like have a V, um, V recovery like we've seen with COVID recovery back 3 years ago or so, or any other recoveries. Just those tend to be a little bit rarer, but once we do drop, where the what has been happening, we do have this still forming. Okay, this bottom is still forming. So we're still in the fourth wave. We are still in distribution slash consolidation. There's so the bearish, let's just quickly look at it. The bearish side of things, we know that this week, what we don't want to see is start going below this level if we can, if the market can hold off. Okay. And we definitely don't want to have momentum carry it within a week down to 362. I don't think that that may be possible, but there have been pretty significant moves with high momentum, and that could bring us down. So, it's in the realm of possibility, but how probable it is, I think the probability is low. But if we do start failing, with high momentum and going through this 375, 373 zone, there is the probabilities become greater and greater for it to go and make a new low and test this 356 area. Okay. That being said, so let's just quickly look at that's just the bearish side of it. Oh, one more thing, just be aware that there is a larger zigzag that's forming. Okay, we had discussed that before, that there is an ABC formation that is forming. But you also should be aware that if we do end up finding some support down here, okay, or some sort of support, in a sense, that there is also this W pattern forming that can get us going towards a new high, for at least get us towards go back and test this 329 area, and hopefully 335. So we are this week is going to be a huge week for the markets. I think that it is shortened week, but it still is a big week. There is going to be a lot of price discovery that will be happening in a sense. Do we see it go move down with strong momentum, or do we see it find some sort of support, or at least just slow down, and kind of just trickle along, trickle along, trickle along. We will have our answers soon enough. So I think for now, um, I have both bullish and bearish trades on SPY. So I'm kind of playing the both sides, and I'm just gonna let it be for now. And I will, change them into now spreads as we go along. They could be, if the bullish side wins out, we'll just go into put credit spread. The bearish side wins out, we'll just go into call credit spread, just to kind of bring that money back into the account and let the other side work. Okay, just let's just quickly look at this 200-day. This is what I was talking about. This zigzag that's following. We are in this bearish flag, and this is pretty stereotypical. Okay, this flag right here, excuse me, is a very important. Okay, we can see it can do this. Okay, this is a normal your harmonic patterns also, or it can make that zigzag that we have pointed out. So let's see how the markets behave. We are below the 50-day SMA, and the failure was pretty big, as you can see the bar that we got. But that does not mean that this week will be in the same thing. It could slow down. So let's just wait and see what markets give us. All right, let's go to the next chart. We're going to be looking at Qs are again a little bit more bearish than SPY is, and that's reasonable because Qs are tech heavy and they tend to be higher beta, so the moves tend to be a little bit more exaggerated. And we are most likely looking at it hitting this 280 area. This is 285 to 280 area. Let's just say this becomes really important. 290 can obviously will give us some support, but for now I'm really am interested here. Let me redraw that just so it's it's with what I am thinking. Okay, this 285 to 280 zone, I think this is where we will see some major support come in for Qs itself. And we're just the nature of this ETF is we are most likely going to be testing this week. It's only a few percent away, so just expect that if we get 2 to 3% move down, now we're going to be knocking at that door of 285 to 80 zone, and that's where we want to see Qs kind of find some support to. It's all, I mean, Fed is hell bent on making sure that inflation goes down. There are some signs that now this is purely from my side is purely anecdotal. I'm seeing some signs that the inflation is receding, but that does not mean I have all the data like Fed do. So they will make their decision. For now, I think markets are pricing in more rate hikes, and the Qs are going to take the brunt of it as we speak. If we just quickly go and also look at this chart, we're seeing the same structure happening, but for Qs, this bear flag it's broken down from the bear flag, came back and tested it. So this zone, this 280 zone, 285 zone becomes that much more important. I think we may hit it. It has the making of completion of a full wave, just like SPY does, but we don't know if that is the case or we see greater move down with the same magnitude of this move itself. Okay, we don't know that yet because that is just symmetry, simple straightforward symmetry. If we do end up seeing some support and things and the way Fed is perceiving what inflation is through their data, we get some sort of not dovish speeches or dovish ideas coming through the Fed, we can definitely see it bounce up and bounce up pretty hard. And so, again, we are in a very important week when it comes to the markets. I think that this is where you want to start paying attention a little bit more. We have gone through from the last Jackson Hole meeting, there was the at this point, I would have to say that markets have digested that data and the information that came out of the Fed. So let's see what they present us with. Okay, let's go to IWM. Um, yeah, same. I mean, the markets are moving in tandem with each other. It's same idea that we're still in this larger correction, and but these. So I wanted to draw out these ones, and I think that you guys can go do it for SPY and IWM also. I mean, SPY and QQQ also. Um, First wave is the hardest wave to decipher coming out of correction. Okay, so what we need to know, so this is something that you can also look up, that when are you coming through a major bear market? Okay, the first wave, we don't know this is the first wave yet, but if it was the first wave of the next bullish cycle, just understand the retracement of this first wave can be 78% to 88%. Okay, 61% is pretty generic, and we are getting to it, but just understand that it can retrace, the market can retrace all of this move down. Okay, that's why the first wave is hard to decipher. And, some people will just say that may not be the first wave, that would could be just the ending of a second or a larger wave from the last cycle, and that is very well a possibility too. So you won't know until you get through this next few weeks and have the market give us some clues of ideas about if this truly is where we think the market can go move back up to this area, or is it going to open up larger downtrend towards this 150 area? Okay. Again, 162.78 being a major pivot. That was the last low that we had, and we've gone through some other major pivots, 190, 182. So this opens up definitely, if we don't see any sort of support coming in at 177, saying that this structure, this five wave structure is coming to an end. Let me redraw this for you guys just so you know. There's this. Okay, this five wave structure is coming to an end. Okay, we don't know that yet. The way I have it is just it's the fifth wave is extended over here, but this could be cut into many different pieces if you like. This could be one, two, three, four, or five. Okay, or if we do end up getting a different kind of a different thing, this could be one, two, and this is your extended third wave, which is a great possibility, fourth, of some sort of fourth wave, and going into this fifth larger wave, ending up closing out this larger cycle. So there's a lot to be desired from the markets at this point to tell us what will happen, what can happen, what are the probabilities. We do understand what the possibilities are, both bullish side and bear side. Okay, they're both moving together. We know that there's a larger W bullish pattern in play. Okay, we also know that there's a larger zigzag pattern that will get us down to new lows for the year. So we are at a major position in the markets where I think markets were maybe a little wishy-washy. We'll see some tug pull between bulls and bears, but it's getting to a point where we should have some resolution if this market's actually going to tank or it's going to find some support and kind of relax for a little bit and start moving back up. All right, thank you for watching. I hope you guys have an awesome trading week, and we'll talk next week. Have a great weekend. Bye bye.